You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots, you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We're a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly. 800-306-1990. 800-306-1990. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990. 800-306-1990. And I remind you, as I do every week, we broadcast our radio program, obviously, Go Country, every Sunday morning, 7 a.m. We take the holidays off, but for the most part, every Sunday morning, 7 a.m. right here on Go Country. We record live at 10:30. We record the broadcast 10:30 Wednesday mornings. If you want to join the conversation, StreamYard.com/Facebook, StreamYard.com/Facebook. You can put your questions, comments right in there. Tell us who you are, and then you put them right there on any of our social channels. Yes, we are on Facebook in a number of areas. We are on our YouTube channel, our LinkedIn channel, Twitch channel. Do you call it a Twitch channel? Okay, we're on Twitch. I just went back on Instagram. Now that Elon Musk, I'm not Instagram, Twitter. Since Elon Musk bought 9.2% of the company, I figured maybe it's a safe place to go back to. So we are back there at Ron Siegel on Twitter, at Ron Siegel. So I haven't even told my team that one yet. I just did that yesterday. And I was surprised I was able to get my old name back because I'd been on for a year and a half. At Ron Siegel. Hey, let's see what we're going to celebrate today. You know, we've been celebrating all week something about a library. I don't know why it's been libraries all week. No libraries today. Farm animals. You know, I think that I'm probably about to a point where I'll be getting back into farm animals very soon. Well, the last time I was into farm animals, my kids were 2, 3 years old, 4 years old, and you have all those little toys that are farm animals. Do they still have those out there? I can teach you. Now, when I was a kid, or when my kids were kids, you pull a string and it lands on an animal and makes that animal's noise, the sound of that animal. They probably got rid of the strings because they're probably a hazard, but they've got something similar. It's got a lever that pulls down. Okay. So National Farm Animals Day. Okay. National Siblings Day. Okay, I'll take that one. Encourage a Young Writer Day. I wonder how young that would be. 2 years old, 3 years old? We could use some new writers for our program. Basically because, well, I mean, the pictures and things, I can't even draw a straight line. So I've got a great team of people behind us that take care of all the pictures. Some of the writing we get help with on that too. I can't write, so maybe I just talk. Cinnamon Croissant Day. I'll take that one. Cinnamon. Does that have any brown sugar on it, maybe? Brown sugar, cinnamon, cup of coffee. I digress. Okay. Yesterday was Chinese Almond Cookie Day. Oh, we even have a picture for that one. Chinese Almond Cookie. Yeah, our team is great. Look at that. Chinese Almond Cookie Day. Name Yourself Day. Ooh, I didn't even see this one. National Empanada Day. Where do you get good empanadas? I like empanadas. Those are good. As long as they're not too spicy. I'm not a big spice individual. So as long as it's not too spicy, I like the empanadas. Let's move right along. Let's see what's going on in the world. Let's talk about the mortgage world. That's what we do a lot of. And no, I'm not looking to. Well, before I get to the mortgage one, maybe I'll just talk a little bit. Where last week, I as you know, we record on Wednesday, so still fresh, top of mind. So we went last weekend, bourbon and steak at the Waldorf in Laguna Beach or Dana Point. Whoa, that's probably about as good a dining as I've had in a long, long time. The Michael Mina restaurant, Michael Mina does great stuff all the time, which is kind of funny for me because I followed the night before. We went to a fish fry eating probably frozen fish on paper plates. Talk about the means to the extremes. So what are we going to do? I don't know. This weekend, I think Dylan Scott is playing. Tomorrow, we're going to go for a great. Tomorrow, I'll throw this out there because I got to behave. 35th anniversary. My wife probably is expecting me to take her out to dinner or something like that. 35 years she's put up with me. Let's move right along. Maybe we'll talk about something related to what we're talking about today, our business today. Debts. I'm in the middle of a new course, and I've told you before, I went and got certified as a certified mortgage advisor. Taught a lot of the background information on mortgages, how the mortgage market works, to read the charts, how predictions. It's not important as to whether your interest rate is the lowest at the start of your loan or at the end of your loan. What's important is the lowest pricing you can get anytime during the loan. So we watch the charts. They help us understand a little bit of what's going on and maybe help us predict what rates are going to do. Unfortunately, lately, the only prediction has been rates going up. Crazy. 1.5 since the beginning of the year. And I'm going to suggest there's a lot of folks out there right now that are looking and saying 5% mortgage rate. They've never heard of that. Where's a 5% mortgage rate? Well, I'm going to tell you, when I got my first loan, I was closer to 18%, early 80s, 18% for my first mortgage. But what am I getting at? Well, you spend a lot of money dealing on debt. So I just want to make sure that you're watching the debts and taking care of the debts. Big issue right there. If you're thinking about buying a house, well, there's a lot of strategies for that too. And I'm going to obviously give you one of our books. It's a home buyer's guide. You can go and get that home buyer's guide. Obviously it's free. We don't charge for your stuff on Ron Siegel Radio. rsrhbg.com, rsrhbg.com. Home buyer's guide. If you're thinking about buying a house, home buyer's guide is a great, great tool. If you're thinking about selling, well, what's important there, we're going to talk a little later in the broadcast about selling and how can you get more money for your house when you're selling it and the buyer doesn't really feel it, even in a rising interest rate environment. So if you're thinking about selling your house, rsrhsg.com. Hey, we've got our latest, our Market Minute is coming out again. So you can go to marketminute.com, and that'll take you right over to our Market Minute. We release those every Friday. Sometimes we don't want to see what's going on the Market Minute, but we still tell you just so you'll have that information, marketminute.com. And when we get into the Market Minute in just a bit, we're going to have quite a bit of data for you today. There's a lot going on in the markets. A lot of it has to do with inflation, right? That's what's driving these markets. I know. President told us and the Federal Reserve said it's transitory. Well, when's it going to stop? Because I look at interest rates or I look at the gas prices and Josh and I cry, right? I mean, he and I, National average as of today, again, I'm recording on Wednesday, $4.16 a gallon is the national average as of April 6th, regardless of when you're listening to this. Now, our tremendous underwriter, Lori, she's out there in Louisiana, underwrites all the loans for our private clients. Does a great job. She's paying $3.95 a gallon is the average in Louisiana. $3.95. $3.95. Can you believe that? Jody, she's paying $4.63 in Arizona. Josh, you're at $5.16. And right here in California, we are at $5.82 a gallon. So inflation is not going to be going away. Not at least until we get a new president, if we get a new president. Just not going to be going away. Okay, it's all policy driven. Interest rates, the Federal Reserve has decided they don't care if we go into a recession. So here's the issue. Interest rates go down generally during a recession. Real estate prices go up during a recession. And we've shared a chart many, many times going all the way back to 1960. There's only been a couple times interest rates have dropped going back to mortgage rate, real estate. Holy cow. Something all the way back to 1960. One of them was 2008. Obviously, the real estate market caused that recession. It wasn't a recession causing real estate to drop. Real estate caused that recession. So that one you have to throw out. 85, I think that the real estate values dropped 1.9%. Doesn't really carry any weight. So when we're in that recession next year, my opinion, no crystal balls, I'm going to suggest to you property values will go up, interest rates will go down. You will benefit from taking action today. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, remote work trends mean flexibility for first-time home buyers. What real property details matter in divorce, mortgage planning, and more. You can reach me anytime. Our off-air number, it's 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. So what is happening in the mortgage world right now? Well, as I share with you every week, we get the latest and greatest of data from our friends at OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. Where are rates as of April 5th? 4.99%.
Ow!
Regardless of what you hear on the radio, regardless of what you hear on the news, Loans locked April 5th averaged 4.99 on a 30-year conforming loan. 15-year loans, 4.014. 30-year jumbos, 4.465. Wait. The jumbo is less than the conforming? Yeah. Get rid of the government regulation and you get a better rate. FHA loans locked at 4.978. 4.978. That was the average numbers of loans locked. Again, through OBMMI, that is dated April 5th. That's about as good a data as we have for you. Again, we record on Wednesday so that you can hear us and they can get us everything edited and put together for us for the broadcast every Sunday morning right here on Go Country. But here's the issue. Why is that important to you? Does it matter? Well, I'm going to submit to you all that really matters is what is your household blended rate? That's way more important than what the interest rate is for your home loan. Yes, I know that's what you're paying, but if you were to go and take a look at a little bit of a scenario, and you can find that scenario, if I can find it, rsrrapidpayoff.com, rsrrapidpayoff.com. That scenario is actually going to show you how you can increase your interest rate on your home loan and drop the amount of your monthly payments and maybe even pay everything off quicker, sooner, faster. Isn't that a Marvel character? Jump higher, faster, run faster, something like that. I don't know. I'm old. I don't remember that. But the bottom line is it's liability management. And I talk about that all the time. Go out there and buy your house. Now, here's the other issue. A lot of folks bought homes, 2020 or so, and they have mortgage insurance on there. Well, you may be able to get rid of that mortgage insurance by restructuring your current home loan and either just have the mortgage insurance taken off. Generally, that mortgage insurance comes off when you have 20% equity in your property. Remember, the 20% equity is based on the appraised value or the contract price when you bought the house and how much you've paid down on it. That does not generally take into account appreciation. So yes, I know your property's gone up 20 or 30%, appreciated 20 or 30% in these years, in the last couple of years. That doesn't get taken into account unless you do a home loan refinance. Now then it does get taken into account, and that can really be beneficial for you in getting rid of that mortgage insurance, maybe even getting the cash out. But wait, Ron, cash out costs more money. Yes, it does. But remember I told you earlier that we're projecting or forecasting a recession next year? If our assumption is correct, then interest rates will drop. Cash out refinances cost more money, but that's good sometimes because it's a strategy. You take out that money right now, pay off all your debts, then restructure later. You can do it after 6 months and at a lower rate because interest rates went down and you don't have what's called a loan level price adjustment for the cash out refi. Now, the idea here is you want to pay your own expenses. It's not going to be beneficial for you to have your expenses built into the loan because the break-even time, you won't have enough time to hit that break-even. And again, that's something we use, a total cost analysis. We put that on the total cost analysis. We'll show you what the benefits are of doing the no-cost loan, which really has costs, they're just hidden, or paying your costs up front. We're going to show all of that to you on the total cost analysis. If you're not getting a total cost analysis whenever you do a home loan, ask your lender why. Why aren't they showing you multiple options? Why aren't they showing you a 5-year and a 10-year or 15-year break even or financing analysis? Why? Maybe they don't know how to do it. Maybe they don't have the tools. Maybe they don't have the team. Maybe they don't have the time. in our world, we use that because we have the team, we have the time, and more importantly, we're looking to take care of you. This is not meant to be a one and done relationship. A lot of lenders are, a lot of realtors are. It's not the way we work. That's not our goal. That's not our mission at Ron Siegel Radio. We want to be a partner for life. The liability partner is a huge, huge thing. Just as important, maybe even more important. I'm going to submit more important than your financial planner, because you may have $500,000 in assets with a financial planner. You probably have $500,000 or $1 million in debt in your mortgage. Just throwing that out there for you. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. RonIsMyLender.com. RonIsMyLender.com.